First, make a list of the goals you want to achieve, the things you would like to have in the near, not so near, and the distant future. You might soon want a new car, a fancy holiday, some years later, a dream house, and eventually a wealth reserve to support you in your retirement years. You can save some money to help you achieve your near-term goals. This saved money, when kept in your bank account, will earn you nominal interest and can help you fulfill your immediate needs and short-term goals. Savings are easily accessible and can help you cover unexpected expenses like medical bills if they suddenly arise. But think about this. Can you really buy your dream house with just savings that yield a small interest? Or will your savings really be enough to fund a happy retirement? The answer would be a resounding no. Prices keep rising and the value of your money keeps going down with every passing day. This means that simply saving may not be enough. This is where you need to be smart and think about how you can generate more money. The answer lies in the magic of investing. Investing means putting your money into financial assets with the expectation that this invested money will end up making an additional income or profit for you by taking a little bit of risk. Investing helps you create wealth, and it also helps to deal with the problem of rising prices. But where can you invest? Your investments could include a combination of stocks or shares, mutual funds, gold, fixed deposits, real estate, or some other instruments. The right combination of financial instruments will help you not only to stay ahead of rising prices, but also to achieve your long-term financial goals. Therefore, savings and investments complement each other and are both important depending on your financial needs and life goals. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.